folks. Marc and Gonzalo here from Mabel Capital Partners with our latest installment of our video series, our webinar series that we put out on a monthly basis. And we're going to start off our call today talking about what we're seeing in the market and how we're adapting to that. So first of all, I'm sure it's no surprise to all of our audience members that the capital markets are not acting in our best favor, and that now debt rates are very high. And I think if you had asked anybody in the real estate sphere what they thought about last year when rates were also persistently high, what they thought about where we'd be at this point, I think most people would have said that rates by now would have receded, would have come down and taking some pressure off of us in the acquisitions side of things. But that's not the case. So rates are as high as they've been. The Treasury is approaching the high watermark that was set back in 2007. And so as a result, our cost of financing has gone up. That's made it very, very difficult in the sense that our deals that we're looking at are a lot tougher to pencil. We're having to look at more deals to find ones that are closer to make offers on. And so, that's really made our side difficult on the acquisition side. Gonzalo, anything you want to mention on that?
Yeah, and I was just going to mention, so one of the reasons, one of the bigger expenses is obviously the operating expenses, what it takes to operate the multifamily assets. And I got 3 points here kind of jotted down that are really making the operating expenses just skyrocket. One is the obvious one, which are taxes. Those things are always being reassessed and reevaluated depending on what county you're in. So taxes are consistently going up. The other big item are insurance premiums. So as you guys have heard in the major headlines, insurance costs for multifamily assets has just been going bonkers lately. Rates anywhere from 20% to 150% increases depending on where you are in this country. So obviously the Gulf Coast, anything along the water front is going to see those really high, triple digits, possibly insurance premium increases. And then as you go inland, you'll see the 20 to 30%, but still that's a huge increase in insurance cost. And that is related really to a lot of factors, replacement cost of structures and just the overall climate change, more catastrophic events, fires, storms and things like that are really crushing insurance companies. And then the third item is the R&M, which is the repairs and maintenance portion of it. A lot of people don't think about this, but the asset class that we're in is C plus B minus, so that's anywhere from 1970s and 1990s assets. And anytime you have an issue with an apartment, you got to get a vendor in there to fix things, to replace things. It's going to cost you money. And now with the cost of labor, with the cost of material continually going up, same thing with labor, it's making that repair and maintenance items very high, therefore affecting the operating expenses. So those three items are really crushing the operating expenses line item as you're underwriting deals.
Yeah, great points, Gonzalo. All those are impacting us. So as a result of that, of all those forces kind of going against us on the acquisition side, we are super focused on putting our capital to the most effective use, to the most productive use. And so as a result of that, we're looking at other opportunities outside of the multifamily value add space. Now, we don't want to get out over our skis. We don't want to take undue risks or get into an asset class that we don't know as well. But we are looking at increasingly other forms of investments in the real estate realm. So now we're going to talk about maybe some of the projects that we have going on, both individually and as a partnership, Mabel Capital Partners, outside of the multifamily space. So Gonzalo, maybe you want to kind of start us off with one of the things you're looking at.
Yeah, I'll talk about one thing that we've been working on is land development. So obviously, as this kind of puts us into the Class A, brand new market rate apartment complexes here in the South where I live. It's the typical 3-level, 4-level garden style type of wood stick build construction. And what I'm working on currently is we purchased a piece of vacant raw land. It's not permitted. It's basically just a useless piece of property right now, about 23 acres. And we're putting that property through the process of entitlements. So basically, we're pulling in engineers and architects and lawyers, and we're getting that property rezoned and reclassified for maybe like a low density multifamily to a higher density multifamily in order for us to put in 100, 150, 200 unit apartment class A complex in that piece of land. But that takes time and it's a process. It's about a 7 to 12-month process to get that raw piece of land into something that's actually shovel ready and used and can be either sold to a developer, a builder, someone who can take that property and start constructing it with it like tomorrow. Or you can joint venture with a developer and a builder and roll over all the work that you put into it and be part of the deal itself. So that's just one way that we're kind of like going outside the multifamily realm, is going into land development.
That's awesome, Gonzalo. So can you maybe talk to us a little bit about what are the characteristics or different characteristics of a land development deal versus, kind of an existing value add multifamily property? As I understand it, there's a little bit different in terms of the expectations for cash flow and appreciation at the end.
Yeah, so basically with this type of investment, there really is no cash flow. It really takes from the day you acquire the land, you put it through entitlement, you build, which usually takes anywhere from 12 to 18 months. There's zero cash flow coming in. You really bank on constructing it, stabilizing it, and that's when really you see the cash flow start coming in. So it is a little bit of a longer period than versus say you're buying a 1970 and then you potentially get immediate cash flow day one.
Yeah, that's great information. So the one thing that I have related to this going on is looking at doing on a much smaller scale a development of a single family home in the Poconos area. For folks outside of the Northeast, that's an area that sits in the northeast corner of Pennsylvania, right on the New Jersey border. That kind of serves as a vacation destination for a lot of folks that maybe don't want to take a flight somewhere from New York City or Philadelphia. They've got an hour and a half to 2 hour ride there, and it's surrounded by a number of different ski mountains as well as summer resorts there. So doing a ground up development of what will become a short-term rental there. And the reason we looked at that is, one, I had a relationship with the builder and the individual who would be managing the property. So feel really good about the team members there. And I think that's key for everything that we're going to talk about in terms of the other projects we have going on. While they may not be the primary focus of Maple Capital Partners and of us as individuals, we're partnering with really strong partners that really, live, eat, breathe, and sleep this. We on the multifamily side really pride ourselves on how much knowledge and experience we have and the trust that creates between us and our investors. And we look for the same whenever we put our money to work, after all. So yeah, excited about that. That's going to be a short-term rental. It's going to be I would say a luxury build. So it's a little bit different than the existing housing stock up there, where folks maybe buy a single family home that looks just like a single family home and then turn it into an Airbnb. This is going to be purpose built with a lot of the bells and whistles that go along with, what you would say is a little bit more upper income short-term rental. Things like a sauna, a exterior steam room, a fire area, fire pit, you could say, on the exterior, movie room, movie theater, game room, all kinds of different amenities that this house is really decked out with to allow it to kind of set itself apart from maybe the rest of the Airbnb competition in that area.
And those of you are not familiar with the Poconos areas, I'm originally from Jersey. Just moved down to Charlotte, but it's got Camelback Mountain. It's got what's that other Mountain Creek ski resort nearby. So there's like tons of outdoor activities. Mark, I wanted to ask you, what kind of build are you doing there? Like, what's the type of construction for this?
Yeah. So we went with a modular build. It's basically a prefabricated A-frame. So for the folks who aren't familiar, an A-frame kind of looks just like the name sounds. It looks like that, almost like a cabin, I would say. Except this is a prefab, so it's going to have very, very durable materials. But also the benefit of the prefab is that it's basically a kit that the developer, once they pour the cement for the foundation, they're able to go in and basically just assemble this in a matter of weeks, this kit. So it makes it very quick turnaround time once you get the land entitled and once you get the foundation laid.
Gotcha. So I'm imagining some flatbed trucks coming in with sections of walls, and they kind of just put it up like a Lego set, kind of, right?
Yeah, exactly. And I think we're timing it well here, where that area has kind of a two-shoulder high season, where during the summer they do well because of all the lakes and outdoor resorts, things like that. And then during the winter, they have obviously the ski season. So I think we should be done right in time for the summer of next year, for the fact of having people kind of go there immediately once we open up.
Very cool. Very cool.
So that's the plan there. What about you? I know you have some other things going on, Gonzalo.
Yeah, so the other thing that's kind of keeping, taking up some of my time, we're obviously doing some flips down here in the Carolinas. So buying some houses off market, the typical stuff, renovating it and putting it back on the market. As people know, it's taken a little bit longer to sell properties nowadays, just due to the whole, climate with people jittery about the interest rates and all that stuff. So it's just taking a little bit longer than what usually took maybe a year ago. But yeah, we're doing these small flips here and there to generate that quick cash flow that then we take and invest in multifamily, because multifamily, as everyone knows, is more of a longer play than, say, the flips and things like that. So
that's awesome. Is there anything that you're learning through those flips? I know you've been doing those for years now, so definitely have some experience there. Is there anything that you're learning through that process that you can make transferable to the multifamily space?
yeah, especially nowadays, and now that the home prices, as people have seen, you go on your Zillow and your Redfins, you see a lot of discounts, 10% discount, 8% discounts, like from properties that are sitting on the property too long. So you want to make sure that whatever home or single family that you purchase, that you have a good basis, basically saying like what you're paying for the home plus your renovation costs, that you're a good 30 to 40% cushion there from what your ARV is of a potential sale for the house. So just make sure you buy right, and then make sure that you get a good budget for the renovations that you're doing for that home. And even if you're holding it for 60, 90 days, I think it still is worthwhile if you can get that ARV that most homes are looking in the area. So do your homework on that.
Yeah, that's awesome information there. And thanks for providing that math there. I know that on the multifamily side, we're constantly tweaking our renovation scope and our renovation budget to get the highest ROI. So it sounds like you're doing very much the same thing on the single family flip side.
Yeah, just like multifamily, make sure that you put a good budget together, get quotes, get your vendor numbers in place, and then as you purchase or acquire the property, you just stick to that budget. Don't go over it, and then just don't be spending it on frivolous expenses, things that you don't need, like hot tubs and fire pits. Because unlike your venture there, Mark, I'm in the lower middle market here of home prices, so we're shooting for that entry level home, a little bit different than the higher end luxury stuff that you're doing over there in Poconos.
Absolutely.
So what else you got going on up there?
Yeah, so also related to the short-term rental realm, I've become a little bit more enamored with this, being that travel is now reaching the 2019 peak in terms of air travel and just travel in general. I think that's one thing that's really surprised folks, is the fact that Americans are traveling again as much as they are, and in the numbers that they are. So looking out of country, I guess you could say, to the territory of Puerto Rico. It's an area that I've visited now a few times and have fallen in love with, and have built some really good relationships there. And so an opportunity was brought to me recently to potentially partner on a boutique hotel. So think of what I was talking about on the Pocono side, except a little bit bigger of a scale. So we're talking somewhere on the 9-key boutique hotel space, or 9, you could say, rental apartments that will be rented on Airbnb, VRBO, all of these different platforms. And this is in San Juan, Puerto Rico. So I'm partnering with 3 local guys who have a ton of experience doing builds on the island. So we're taking an existing lot with a single family home and basically, gutting the thing. And, from the shell, we're basically starting to rebuild a small boutique hotel there that would have amenities like a pool and kind of, obviously there, a big concern is the hurricane. So it's going to have a ton of water cisterns and generators to make sure that whoever stays there doesn't have to worry about, a hurricane coming to town. So all that is to say is that we're doing pretty much a ground up. I would call it, it's much akin to a ground up development of a hotel deal. And the hope there is that we can qualify for some tax credits. In the multifamily side, I know there are a ton of tax benefits. And definitely, you've got to look into what your state and county may offer in terms of incentives. Now, in Puerto Rico, the tax credits are incredible by most standards. We're eligible, if we're able to execute on this plan, for tax credits of up to 40% of our tax bases. So the numbers that Gonzalo laid out when he was talking about the flips, you're adding your purchase price and your renovation budget. If that comes out to, let's say, $1 million to make the numbers easy, you are eligible for potentially up to $400K in tax credits, which can take an all right deal or even a good deal and make it a grand slam. So we're interested in pursuing that as well.
Wow, it's an amazing tax advantage over there.
For sure. I know we talk about this all the time, is the tax code is what it is. It's a set of steps that basically, if you're able to follow them and abide by them, the government is able to offer you some incentives to bring about certain types of behavior. One of those behaviors that they want on the island of Puerto Rico is they want investors to go there and bring capital and build housing for hospitality. They want tourism to be a much larger portion of their economy. That's definitely something that makes the deal a little bit sweeter for us as investors.
Yeah, I mean, if the IRS is providing you a set of guidelines, you have to take advantage of those guidelines, right?
Absolutely. So these have been some of the projects that we as individuals and as a partnership have going on at Mabel Capital Partners. Obviously, like we said, they're a little bit outside of multifamily, but are intriguing nonetheless. And there are a ton of skills and experiences that we can leverage from those investments and then take over to the multifamily as we continue to grow our portfolio there. So we hope that you've learned a little bit here. And, if you're curious about any of these projects that we have going on, please feel free to reach out to either of us. And just like we always do, I'll sign off at Mabel Capital Partners. Be kind, be charitable, and invest wisely.
Take care, folks.